Hi, everybody. What's going on? My name is Adam Mesh, and I'm here live with Todd Horowitz, who I'll be introducing in just a moment. I want to welcome you to the Option Money Machine call. Thank YOLO Publishing for this time spot, and I'm really excited. What we're going to discuss with you is something that did not exist 2 years ago. It's revolutionized trading for me, and I think you're going to be really happy with the time you spend here and what comes out of it. With that being said, you can chat in questions, but what we'll be doing is we'll be doing the presentation. There will be time for Q&A later on. So if we don't answer them right away, don't get frustrated, because as you know, if you're talking, you don't want to disrupt your thought. It's too hard to keep doing it. So we will answer the questions. Don't think you're being ignored. And where can I see the questions just to make sure? Let's come in right there. Okay, perfect. All right. Look, there we go. All right. You guys ready to get started? You ready to learn one of my favorite secrets about trading right now? First, I'd like to introduce Todd Horowitz. Todd has been a member of the Chicago Exchanges for 30 years. He's the founder of Average Joe Options and a regular contributor to Fox Business, CNBC, and Bloomberg, and he's also the person that taught me this strategy, and a very good friend. What's up, Todd?
What's up, everybody? Hey, by the way, just can somebody chat in and say that they can hear us, just to make sure everybody's hearing what we're saying? I just want to make sure. But great to be here, Adam. It's exciting. The strategy is so exciting, and you know me. I've used this strategy forever, and obviously in today's market, which what you said, it's the best ever, and I'm really pumped about it.
All right. All right. Todd, were you concerned that people couldn't hear us? Because I think we're all good.
Okay. Maybe you're on your side you can see it, because I don't get the same chat window, so I'm good. Okay, cool.
All right, great. All right. So Todd, as I said, Todd's the one who taught me the strategy. For those of you who don't know me, my name is Adam Mesh. I spent 17 years as an electronic trader, founder of the Adam Mesh Trading Group. I've been written up, Consumer's Digest, Average Joe gives above average trading advice, been on all the networks, Tonight Show. Good credibility. Between the two of us, it's hard to find a bad thing to say about us online, and nowadays where everything's written online, that's an accomplishment that we take proudly, if that is even a word. All right, let's go over the agenda. Let's go over how this is going to transform your trading. Okay. We're going to be talking about the origin of the options money machine. How did it begin? We're going to define exactly what our strategy is. We're going to talk about what makes OMM so exciting, a virtual ATM, and I'll explain what that means. We're going to give real-life examples of the strategy in action. You're going to love these because you're going to be able to see how it works, and it's going to make sense. Also, we're going to talk about what about when things aren't going well. For example, in January, the market dropped 1,000 points. 1,000 points. So how did we do in January's 1,000-point drop? February perfection, something we're really proud of and not many people can say. We'll explain what that was. Most importantly, and most people don't do this, but we can and we're proud of it, we'll show you what about right now. Not only do we have a track record that is second to none right now, but we'll give you live, up-to-date, as recently as this week, how are we doing with the options money machine. We'll talk about how you could take advantage of the option money machine now. And as I said, we will leave time for a live Q&A. Okay? All right. The origin of options money machine started with a bet I couldn't lose. So here's the story. I first met Todd in around 2008, and I was always pro stocks. He was always pro options, and we always, we got to the same place. We just did it different ways. And for years, he was trying to get me into options. I had no interest because if it ain't broke, why fix it, right? I made my money in stocks. Finally, Todd said to me last year, Adam, there's a strategy that you have to try. It's a market that's not even that old, but it's perfect for the way you trade. It's what Carl Icahn is doing. And this is when Carl Icahn was taking that big stake in Herbalife. He said, this is exactly how the big guys make big plays. So I tried it, and I said, I'll give 17 trades. So that was the commitment. That was the nickname for it. It was supposed to be just 17 trades. I said, I'll do 17 trades. I'll see how I do. And it was 17 100% winners in a row with this options money machine strategy. So let's define what it is. And as you see, the people using it are the highest level investors. So the options money machine takes advantage of the weekly options market, which only began 2 years ago, but it's just now attracting major attention. Okay? So again, this market did not exist more than 2 years ago. And as you'll find, and I put at the beginning that my background is as an electronic trader. When I got into electronic trading, it was a relatively new market. Okay? When I first started doing electronic trading, it was only a couple of years old, and we were able to take advantage of it like you wouldn't believe. My success, I showed you, it was documented everywhere. And so I love new markets because there's going to be a period of years where you're kind of ahead of the curve by using it. So what are guys like Carl Icahn and George Soros doing? They're selling out of the money puts, okay? They're selling out of the money puts. How does it relate to you? Because you're not going to invest with that kind of money, nor will I. It's an income strategy. Right now, we're averaging $140 per trade with a 93% annualized return. So we make 3 trades a week. Our goal is to make $300 a week, but right now it's been doing better than that, as you can see. But that's it. It's an income strategy designed to make you money every week. We're not promising you millions of dollars or hundreds of thousands. And in the time that I've been doing this, I've realized people don't want that. They just want to make money. They want to stop moving backward and move forward. And is that you? Is that fit your category? If you're on here because you want to make $1 million from this strategy, I'm telling you, it's not what you're going to be doing. Okay? That being said, once you learn it, will you be able to take it to the next level? I think so. I've been using it to scale, so to speak, and it's my favorite thing right now. Okay, so what makes the OMM so exciting, and why do I call it a virtual ATM? By selling out of the money puts, and I'm going to show you in examples what we're doing by this. It's a weekly trade. So let's take Starbucks, for example. That's what I'm going to show you for a second. Let's say you wanted to buy it and you missed it. You're able to go back and correct that. So by doing a weekly trade and collecting premium, first of all, the most important thing in trading is being disciplined, okay? And because these trades are done for each week, it kind of controls what you're going to be doing. You can't overtrade, you can't undertrade. You're just doing a set amount of trades. So it's the definition of discipline. Whereas sometimes people get in a stock, right? And maybe you subscribe to a newsletter and they've told you to buy a stock, but they don't really tell you how to sell it. And you're just holding it forever and you don't really know what to do with it. Well, that's not discipline. You have no plan of action. Or maybe they tell you to buy it or sell it and you don't listen. Well, with this, because we do a webinar that takes 30 minutes max, it used to take 15, 30 minutes every week, you're seeing exactly what to do. There is no variation, so it's completely disciplined. Also, when you're doing the weekly options, one of the things I love as a trader is it gets cleared out every week. At the end of every week, it's over and you start another week, so you're getting organized. Your portfolio always looks clean and neat. And as someone who always tries to envision himself trading with a clear desk, you know, the ability to be organized for me and Todd is huge, you know. And then getting paid every week. With this strategy, you're selling the out of the money put, so you're collecting the money up front. And there's not that many deals you can find in this world where you get paid that money up front. In this case, you do, and it's something that I've realized is valuable because over 90% of the time we end up hanging on to that money. So what makes this so exciting? Continuing. Imagine if you could go back in time and take advantage of missed trades, okay? And here's my funny picture of a time machine. But that's what we're talking about here. How many of you have ever loved a stock? Maybe it's a $40 stock, right? And you wanted to buy it at $40, or maybe you did buy it at $40. Maybe you bought some. And all of a sudden, you realized I was right. That stock was great at 40, and now it's at 42, and oh man, why did I buy so little? This was so good. I loved it at 40. Now I'm not going to buy more at 42, but I loved it at 40, and I should have bought more, and this is my big break, and I missed it, and I wish I could go back in time. And the answer is, well, now you can. That's exactly what you would do. You would sell an out-of-the-money put. You would sell the right to own the stock at 40, okay? So you'd be selling the right for someone to sell the stock at 40. So you're selling the out-of-the-money put, okay? And you're collecting a premium for that. So let's say it's 40 cents, and you do 3 contracts. What you're getting is $120 right there. You're getting your $120, and it's saying if that stock stays above 40, you keep the $120, okay? If that stock stays above 40, you keep $120. Now, what happens if it goes down to 40 or below? Well, your break even, if you sold it for 40 cents, would be $39.60. And what that's saying is you'll then take ownership of the stock. But you know what? It's the stock you wanted to buy more of anyhow at that price. And as you'll see in our presentation, in the rare cases where we do end up owning stocks, those have been our best trades. Let me say that again. In the rare cases where you end up owning stock, they become our best trades, because this is the hybrid that Todd and I created. My skill set was always identifying really good levels. I could get into stocks that I knew had a very strong base of support. And what Todd showed me was how I can make money off of the support without even needing the stock to go up. And that's something else we're going to show you. So I could say, I know this stock is great at this price. I can't tell you if it's going up 5 points or 10 points, who can? But I know at this price, I want to own it. And Todd said, well, you could do this strategy, which is the options money machine, and you'll make money even if it just stays at the price you love it at. So I could go back, and if I didn't buy enough of a stock on a stock trade, I'll sell the put, I'll collect my premium, and I'm making more money on the trade. So whether you missed it or you didn't buy enough, this is the way that you can correct that. So let's take a look at an example of what we're doing, okay? Here's a Starbucks trade. Now, the bottom green line, you can see that's the support we loved. And as you see, this is almost, it's like a month's time, but we're doing weekly options. So we had this sitting here for a couple weeks at the 70 level, and it started to move off that level, and I actually own this stock. I own Starbucks, and it was going up, and when I saw it was at 72.50, I said, I really wish I would have bought more. I wish I knew it. I love Starbucks at 70. Why didn't I buy more? So you know what I did? I sold the put, and we sold the put on the options money machine. So we sold the right for 70. We were saying we're willing to take ownership at 70. So we had a $2.50 head start for the week, okay? We collected 67 cents on that $2.50 spread. So our break even was actually at 69.33. 3 contracts times 67. I got to do it on the calculator because I forgot what it is $201. I got paid $201, and so did all our members. And you know what the stock did? It went up. So I still own my original stock position, which you don't have to do. You know, that's just something I did. But I made more money from being right about that 70 level. SLW. Okay, now look at the support in this. This is now December, January. See, 2 months of holding between 20 and 21. 2 months of identifying that level, just sitting here. Okay, so we sold it as it started to come up off that level. We took entry around $22, and we said we'll take ownership. We sold it for 30-something cents. So we said we'll own it at $21.70, and our risk, this over here is the 21 level, so we were risking 70 cents. It ended up, it went down below 22 because it was tight. We took ownership of the shares at $21.70, and the stock went to 25. It actually went higher, but this is where we started taking our profits. And this was on 4 contracts. This was over $1,000 winner. So you see, that's how taking ownership ends up being one of the best trades. If you look at it, we were fine owning it here at that support because it was never going down. But what happened was we did own it, and then it exploded up, which is going to happen when you identify good trades. Same thing with LNG. Look at that support baseline. Look at that support. October, November, December. This thing at 40 was a beast. And now it came up and it started trading above 40, closer to the 45 level. So we sold it a little bit below 44. We knew we had major support in the stock. We were willing to take ownership a little bit below 42, so very little risk in the trade, as you could see. And we did take ownership in this stock also. We were out of it at 48 and change. So we made 6 points on the trade. It's actually now at 58. So I don't know if I should be bragging about this one. I'm sorry. But, I mean, phenomenal stock. Great identification here. Right, Todd?
Absolutely. It was it was a great trade.
Yeah, we only made 6 or 7 points in this stock as opposed to where it is. And that's one of the things that I'll show you also as we go is it's a great identifier of good trades. But they don't have to move up like this. For example, Walgreens, we've traded this 5 times since the service started. Look at the level. Look at the levels. Now it's exploded up, and we haven't traded it lately, but we had a period for 2 months where we traded it 5 times just collecting premium. 5 100% winners. When you see a chart pattern like this, you see it's just sitting in congestion. That's fine because we have the support. So it didn't have to move. We made money in it every week. Now for you people who like to, do other kinds of trades, it was also a great trade because it ended up exploding. Okay. Here's another one. This is one of Todd's bad boys he identified. Altria, Philip Morris, MO, has paid us on a weekly basis. And I want you guys to see this. If you look, it was sitting at the 35 level for a couple months, paid us often, then it shot up, continued to pay us, and just a really consistent stock that doesn't move that way but loves paying us. Another one that's gotten a little more exciting lately is Microsoft. Microsoft was sitting in a congestion for 2 months. We sold it 6 trades. We collected 100% premium every time. Now it started to go up. It didn't make the cut for one of our top 3 trades in the last couple of weeks, although it could have because it was another winner. But there were some people that missed the trades. They didn't show up for the call. And the next day they said, hey, any ideas for me? And I put an email out there. I said, this is an off-the-record trade for those of you guys who missed it, but I would tell Microsoft, and they did, and they caught it too. And that just kind of illustrates that this is a very friendly service. Todd and I go out of our way to make sure you have a happy user experience. The one thing I learned is, you could have a track record like this, but it means nothing without the relationship that goes with it. If people don't understand why you're making these trades and how you're doing it and who you are, if they don't believe in you, they're not going to believe in your service. So we have the track record. In fact, anything we've ever done has always had a track record, Todd, right?
Absolutely.
In fact, there's been times where we have the track record of what's going on, and what we really do with this when we emphasize the relationship. So instead of just the newsletter, we do a recorded webinar at 11:30 in the morning Eastern every Thursday where we explain our trades. We have it narrowed down to a list, and then of that list, we identify 3. We explain why we're doing it, show everyone how it's done, answer any questions, and then send out the trades within 10 minutes of the call, ideally, so everyone can get those picks. So it's not just the track record, which is extraordinary. It's the relationship that goes with it. Now, a couple more. eBay. This is one we've done 7 trades, all 100% winners. If you guys have been following this stock, you know Carl Icahn's been lobbying for them to separate their PayPal unit from the rest of the company. And what's that caused? It's caused a whole lot of nothingness. The stock froze. The stock froze as they tried to decide who's going to win this battle. And as it froze in that range, we just kept selling puts and selling puts, collecting 100% winners 7 times in a row on eBay. Okay? Verizon. And I'm going to show you, this is a trade we actually made this week as well. But this is all of December and January, we were able to profit in the stock from it doing nothing. It moved in a 1-point range. We kept selling puts in it, and it's been a phenomenal stock, and we're selling it as recently as this week. We'll be able to show that to you as well. So what about when the market gets bad? I want to tease you for a second. What about when the market gets bad? What about when the market goes down? Because essentially what we're doing is a bullish strategy, right? We're selling out of the money puts, which means we want the stock to stay where it is or go up. And Todd, when we were first doing this, said, you know, the one thing we got to be careful about is when we hit a down market, you got to tread lightly. And I always took that warning very seriously. But you have to remember, with the stocks we're trading, it's weekly options, and we're giving ourselves a head start every week. So even if the market goes down, it has to go down enough to give us the stock, and then it would have to keep going down to cause us to lose, and we're managing those positions. There was 1 week where the market went down every day. The market went down every single day for the week. Remember that? And so we ended up owning 2 stocks. And that morning, we were on the phone managing positions, and we navigated them. We gave 2 updates in the morning on move up your stop and then sell. And we told people exactly what to do, and they were thrilled. So how did we do in January's 1,000-point drop when the market went down? At the time, January was our best month ever. These are the results, just so you could see them. Our best month ever, because look at the stocks we're trading. We're not going after Netflix or Tesla or Solar City, something that could drop 10 points or 100 points in a week. We're going after the names that don't move, tread, or go up. And if they're trending, we're going to identify them, and we're going to take advantage of the patterns that they're in. So this was our February. This is January. This is every trade we made in January. So I said it was our best month ever, but that was until February perfection. Have you guys ever seen anything like this? This isn't some of our trades. This is every trade we made in the month of February. 100% premium on every trade. The only thing you have to do beyond these trades when you get results like that is pay yourself. Take the time to pay yourself. Okay? But don't just show me February, right? Because we're in April now. So how are we doing as of right now? You know, I could keep going. I'll show you every trade we've ever made. It's the best track record you'll ever see. But how are we doing right now? Okay? How are we doing right now? For this week, we did 3 trades. We sold Verizon based on this chart. It's gone up nicely. It's 100% winner. Okay? If you look at Abercrombie and Fitch, ANS. Here's another one I identified. This would have been a great trade idea as well, as you see it. We sold the 3650 put, collected over $100, and boom, it shot up. So it would have been a great trade idea as well, but we were able to take advantage of this. 100% winner, and we only made 3 trades. The third trade was Mosaic, which we sold the 48, and it's trading at 49 change, 100% winner, based on this cup and handle chart pattern. If you see the pattern, it's a beautiful pattern, one of the most bullish there is. We sold the 48. It shot up to 50, 60. It doesn't really matter. Now it's at 49, but again, it was a great stock trade, but it was also 100% winner. So, you know, the last 3 trades we made were 100% winners, and if you want to go back the week before, the last 3 trades were 100% winners. So what's the catch? You know, like, if it's so good? As I said, it's not a $1 million strategy. We're not trying to take the risky stock, so sometimes we'll only collect 27 cents, 37 cents per trade. So our goal, again, is just to pay ourselves $300 every week, okay? And That's what's been working for us, and we love doing it. So now, how can you take advantage of now? Okay? What we're offering for you on this webinar with the Options Money Machine is weekly option picks. Okay? Weekly option picks. Every week we identify the optimal trades to upgrade your portfolio. We went over that. It's usually 3 trades a week. Sometimes it could be 4. Sometimes it could be 2. But it's a weekly options picks. It's a once-a-week trading strategy. Portfolio management. We will manage every position we enter together, catering to all account sizes. And I'll explain what that means. Because one of the questions always is, well, what if I don't want to take ownership? Can I do a spread trade? Yes. For every options trade we put on, we explain how to do it as a spread trade. So with the portfolio management, there will be times where you own stock. For example, Mosaic right now, from a previous trade we did, people own and they're making money in. And we're just managing that position because it's a stock we want to own. We've owned Verizon, a great dividend-paying stock. We've owned Duke Energy at times. The most positions I think anyone's ever been in with us is 2, because most of the time we're collecting premium. But if you end up owning a stock, we 100% manage it for you. Market analysis. As I said, it's about the relationship for Todd and I. When we're on the call, and I know I'm doing most of the talking right now, but Todd and I go back and forth on the call, we explain the why behind every trade. Todd is on Fox, Bloomberg, CNBC, you name it, every week, and they're asking for his take on the market. So when we've narrowed it down to those trades, we're going to explain what we're seeing and why we're doing certain trades. For example, that SLW trade we put on was a hedge trade because we didn't like the market at the time, and it worked out perfectly. Like, we bought silver, and we've also bought gold at different times for the week, and they've been beautiful trades. So we'll explain the why behind every trade so that you understand the strategy being employed, okay? And then special group training. This is something that's never been offered before. By signing up with us, you'll get access to a bonus exclusive group training session. This was something that Todd and I did. It's 2 hours of training on exactly how to do this. It's something you'll love. It will explain everything. So that's one of the bonus things you're going to get with this Options Money Machine. So one of the things, though, about it is it's a relatively new market. It's only existed for 2 years. So we've actually been easing our growth with this. Like, when we started we started in August of 2013, and we only allowed 30 people on in those 4 months because we wanted to be smooth. We wanted to work out any kinks, which there weren't, and just make sure everyone had an optimal user experience. Now we've started to grow it. I saw people coming onto the call. The number keeps getting bigger until as late as 20 minutes in. So I'm sure there's like 5-10 people who missed the beginning of this presentation, but there's a lot of people on this call. One of the things that we're going to do is allow 25 of you to join us now, okay? And it's the first 25 people will get this special group training, and there's also a bonus surprise for any of you guys who have ever met or seen on Fast Money, John Najarian. He's one of the hosts of Fast Money, a founder of Options Monster, also a friend of Todd. He's going to do another call with us where we just kind of discuss this strategy, discuss what's going on in the market, a very private call. Usually you can only see him on TV. I don't know when that will be because I wanted to wait until something special was happening in the market. But that's going to be something else that we have for the first 25 people who join. So the way you could be one of those 25 people, we're going to give you 3 minutes to sign up. But what I want you to do right now on a different browser, don't log out of this, but on a different browser, I want you to go to meshelite.com, and I'll chat it out to you right now. It's my last name and then Elite, okay? And I'm going to explain what's going on here. It's meshelite.com, meshelite.com. I'm chatting it out to you. So you have to go there in a different browser right now. And what you're going to see is there is The regular price for 2 years, which is normally $1,998, but today it's for this call for the first 25 people, it's $1,297. And for the yearly price, it's normally $995, but you get 20% off, which is $795. I'm not the pricing expert on this stuff, so I'm like looking to see what promotion they did. They did 20% off. I don't know why they discounted it at all, because the service, think about this. So it's for that yearly option, $795 for the year. If you divide that by 12 months, and it's a year from whenever you join, it's $66 a month. Divided by 4 weeks in a month, it's $16.56 for a week. And our goal is to make you $300 every week. And not only is it our goal, but we've done it. That's what we're averaging since inception. Sometimes it's more. Sometimes it's been less. Maybe we did tighter premiums or whatever. But that's the average. We've been averaging over $300 a week. Your cost would be $16 a week to get that webinar, the portfolio management, the market analysis, and the special group training. If for some reason you pay the $795 and you just don't like it or whatever, then you have 30 days. You could let us know, and you would get $695 back. The reason why we keep 100 is because of the customer support we provide on a daily basis. Todd and I are very active in responding to emails, so is the rest of our team. We put a lot of TLC into it, so that's why we do that. So it's $795. Go to meshelite.com right now. It really is only for the first 25 people, and every time I've done this so far, based on the results and the reputation of service, it's filled up. So take advantage of this 3-minute window to go sign up. And as you're signing up, we're going to answer some questions. But I'm going to give you 2 minutes to go sign up. Then I'll come on and answer questions for a couple minutes. Then we'll end with some more surprises. There will be some more surprises after this, but you can write in any questions you have right now, okay? But first, go sign up if you want to claim one of those 25 spots. You're going to have, I'll give you 3 minutes. 3 minutes. The person just told me to give 4 because, to put in the credit card and stuff. So you have 4 minutes. Go now to sign up. One more thing, we just sent the link out to everyone. If you want to go and click on that link, we'll take them to another screen. It will open another screen on your browser, so you can sign up right there. So just click on that link where it says meshelite.com. All right, now you have 3 minutes. All right. Don't worry, you're not out of time, but Todd and I just want to answer some of the questions as they're coming in. There are 20 spots left. 5 are gone, 20 are left. Claim yours now. Some important questions to be answered. Do you need, do you have to take ownership of that? And Todd's a specialist. My answer is no, but Todd will explain why. Todd, just explain to everyone how it works with spreads.
Okay, if you don't want to take ownership and you want to be able to gather the same premiums that we're gathering, what we do is we sell what we call as a credit spread, or some of you might have heard the term bull put spread. So what we're doing is we're creating the same credit that you are getting by doing the naked, but we're using spreads to do that. Which what that does, it takes us out of the risk of having to take ownership of the stock, and this works really well. If you've got a smaller account and you don't want to get involved, or you want to take it a little bit slow, you use the credit spread so that it allows you to gather the same types of premium and continue to get that return on a weekly basis, because the theory behind it is the same. Now, what we do is we just simply create that credit by selling one put and buying another, and that creates a net credit, which then automatically puts a bottom line in how far the stock can go against you.
Okay, and then I'm just going to read some of the. Okay, so sorry, let me just go. So a lot of people have written they could hear. Someone wrote just $300 a week. Yep, that's the goal. Naked with no protection. Again, we could explain how to put on the spread trades. It will be a little bit less because you're not willing to take ownership, but it's still a consistent and productive strategy. But don't you need the money in your account to buy the stock? Yeah, if you want to take ownership of the stock, you have to have the money in your account. I recommend doing this with a minimum of $15,000 in your trading account. Otherwise, you could do it for less, but you want to do it with the spreads in that case. So $21,600 to earn $120. The way I look at it is, if you had a $15,000 account and you're doing $300 a week, you're pretty much doubling your money, or right about that. So that's what we're looking to do. Now, as you learn it, if you're more, everyone's different. That's the one thing I learned. There's a lot of people on this call. You're all going to be different. The one thing I could say for sure is you could go at your own speed. Some people, as you use the strategy, will end up doing bigger contracts like I do. I don't sell just 3. I'll do 10. I'll do 20. Some people will be smaller, but they want to take ownership. Some people will do the spreads. You're going to see exactly how it works because you are getting the education, not just the recommendations. Okay? Todd, can you do these trades in an IRA account?
Yes, you can. As long as you have the correct options approval, you can do these in any account, and they're easily done, and they're recognized as spread trades, so you don't have to tie up the capital if you choose to do it that way. And remember, just so everybody knows, this is a strategy that I've actually employed for the 30 years I've been trading. Okay, I've used this strategy, and unfortunately, I used to only be able to do it once a quarter. Now I can do it once a week, so it's a heck of a lot better. Instead of doing 4 trades a year, I can get off 52. And number 2 is, as you grow, we believe in organic growth in your account. So as your account size gets bigger, you can also step up your trading size. But we like to be, as Adam likes to say all the time, we like to under-promise and over-deliver, and that's what we consistently do with our results on a weekly basis.
Okay, thanks, Todd. Good answer. $300 a week in one size account. $15,000 a $15,000 margin account. Any new trade results for 2014? Everything we showed you was for 2014. Just to be clear, that's important. The January results was 2014. February, the perfect February, was this month. And then we also showed you the last 3 trades we made, the 3 trades before that, 100% winners. It's the best track record we've ever had. It's the best track record I've ever seen. Please give format of how your weekly picks are relayed to members by email. Okay, so what we do is we do the webinar, and before we could even get the replay out, I think, we already have the trades written up, and we sell them. We send them out and said, sell, whatever the contract is, the date, the price, the amount that we're looking for, and we also say how each one is a credit spread. So we give you the exact thing via email, and we also have an app which we would provide you with access with, so you can get alerts on your phone that way too. Okay. For the question of payment plans, no, the service is too good. It's set up. It's a yearly fee because, I mean, as I said, it works out to $16 a week. If you have questions, or if we ever do that and you want us to contact you in the future, you can email Stephanie@adamesh.com, and I'll send that to you right now. Keep asking questions. I want you guys to understand everything. By the way, there's 11 spots. There's 11 spots left. 11 spots left for the thing at meshelite.com. Again, click on that meshelite.com to claim one of those last 11 spots. Let me just say, yeah. How is this service related to the Phoenix options and/or average show options? It's not. This is a collaborative effort between me, who is part of the Adam Mesh Trading Group, and Todd Horowitz, who started Average Show Options. It's a unique service by itself. I'm related with Adam Mesh Trading Group. Todd founded Average Show Options. So this is different than the other two. Okay.
This is simply a service that we are not only are we doing our due diligence and looking at the stocks and making sure we're putting you in the best possible position, but should the market start to turn, we are using the stocks and where money runs to first, which are stocks like Verizon, Adam showed you, stocks like Altria Group. We're using stocks that will hold up in any market condition. No matter what's going on, the rate at which those will change will be much less greater than most. And when you're doing this, as you can see now, even though the market continues to go up, you can see money starting to flow into what we call the safer cyclical stocks like Altria, Verizon, AT&T, Microsoft, because those are the stocks. That's our sweet spot. We are in this to grind out a profit on a weekly basis without exposing a big portion of our money to get involved. And these are purely, yes, they can go down, and we've been assigned stocks, and we've made, as Adam has said, those have been our biggest trades. But at the end of the day, the stocks that we're using in this program are going to be very safe as a rule. And if they do go down, we have had a stop out or two, but again, the losses are minimal because we are managing the trades and we're using stocks that are basically what they call the safety or the safe havens, where money runs to that has to be in the market at all times. So when it comes out of the explosive stocks, it runs into the stocks that we're dealing with every day.
Thanks, Todd. There's a lot of questions that we're going to answer. The window is winding down for this with the special bonuses. I said to them, you're good to go. You know. Okay. Sorry. I'm just trying to answer individual specific questions. I try to answer. Okay. All right. There's a lot of questions. Okay. Sorry. Do you do call credit spreads if we enter into a bear market, I assume? As of now, we don't, because even as we saw in January where we dropped 1,000 points, we're still successful with the stocks we're targeting. I'm guessing we won't.
Can I comment on that?
Yeah.
Okay. We're not going to do call credit spreads. We are strictly working the support levels of safer stocks. Now remember, when the market does start to turn down, and someday it will, and I don't know when that day will be, but someday it'll start to turn down, we will still be highlighting the safer stocks that will be at least holding their support level of not going up. But the benefit to everybody on this call that decides that this is the right time, what happens when the markets start to go down, we get paid even more. The premiums will start to rise, so we will be getting paid more money to take the same risk of stocks that we are looking to own anyways. So our returns our returns are being made in the lightest volatility market in almost the history, and we're going to return 100%. If we get some action and the market does start to turn a little bit and move down a little bit, our returns are going to go up exponentially based on volatility rising in the market, because we're going to subscribe to the same theory in which we built this program on, which is safety stocks that allow us the opportunity to get into stocks that we would be looking to own either way. But what we do is we get to collect the premium, being the insurance man, and knowing that we understand the volatility angle, it gives us the much bigger return, and it gives us the way to read stocks and enter while collecting more premium as the markets do start to sell off at some point.
Just so you guys know, in like a minute, I will make a monthly option available too. You won't be able to have access to the special training, the special John and Jerry call that we discussed, because that's going to be exclusive. So it's not the best. It's not as good a pricing, and it doesn't come with that call. But if you wanted to ease in and just use the service on a month-to-month basis to see how it goes, we will make that available. Okay. What is your overall winning percentage with BP spreads? I recently did my first BP spread with real money on SCTY, and I got burnt. Yeah, it's because Solar City dropped 10 points. We wouldn't even trade a stock like that. Todd, we didn't calculate the percentage on spreads. You're making money with the spreads. It's not as much as if you're selling them naked. Plus, you're not getting the jump on the ones you take ownership of. So I would guess it's probably at like 50%. Maybe like $150 a week. Does that sound right, Todd? Or do you think it's more or less?
I think it's a little bit more. I think it's probably 65 to 75%. I would say on average.
But like on the LNG and SLW, they're not getting the gains
right.
Yeah,
so, 100%.
So I think, it's successful, but not going to be as successful as being willing to take ownership and stuff like that. Okay. And Solar City was, that made a tough move. Right, exactly, Myra. Irv, yes, just email Todd. Do we offer auto trading services? If you join, we could introduce you to some of the top firms that do it. The disclaimer is that we are not a brokerage. We're giving the trade, so we would introduce you to a firm that we know other people have gone to and been happy with, but we can't promote auto trading because that's not our business. But we can introduce you. So if you were to sign up, we would be happy to help you with that. All right. How much does everyone in the group making the trade affect the trade? Good question. For the stocks that we do, not that much. Most are going to move it as a penny or two. We're trading the high liquidity stocks, but that is a problem. What you'll see on our list is we'll narrow it down, and on certain trades, Todd will stop me because he's more of the expert when it comes to options and has a much stronger background. He'll be like, Adam, we can't do that one. I don't like the volume. So you'll hear that come up pretty much once a week with a trade idea where Todd calls me off and says we can't do it. So the ones we're doing, it won't affect it, but that is an issue that we're battling. So great question. Do you need your margin account if you do the spread trade? Todd?
No, you don't need necessarily a margin account, but I would recommend that you have a margin account because it makes it easier and it frees up your cash to trade, because if you start actively trading or trade more and you're doing other trades besides what you're doing here, you do run into Reg T problems because of the number of trades you make. So it's just easier to have a margin account so that you are in a position to be flexible with that account and not have to worry about if you make other trades, because again, there's when you're dealing with FINRA and those other things, you have some other restrictions that come in. So it's just easier and more efficient for you to have a margin account.
Real quick for everyone, I also want to make available the monthly option. This is pretty much speaking to all the people who have ever had a bad experience with someone else, and that's why you're nervous to pay the rate. I mean, at the $7.95 rate of $16 a week, it's like, this is a service I recommend to like my dad, my sister, anyone who wants an income strategy. It's amazing. But if you've had a bad experience with it and you want proof of concept, go to meshmonthly.com right now. We'll send out a link, and you could subscribe for the monthly rate. And let's see what we put together for you. What kind of discount? I think there's also a quarterly rate. Always nice to give yourselves 3 months to make sure it works. Take a look. Yeah, so the quarterly rate is normally $3.99. Today it's $3.49, 13% off. And the monthly rate, which is normally $147, they did a good deal on that. It's 14% off, so it's $127 a month. I know a lot of people like that, so you can go there right now to take advantage of meshmonthly.com. Okay, I'm going to keep it. I'm going to keep answering questions for you guys until you can't ask questions anymore. All right. I love the question, by the way, where it was like, what about your results this year? Like, every trade we discussed was this year. So thanks for giving me the opportunity to answer that. But you have that offer, right? Yeah. Okay. Sounds good, but I've never traded before. So, I mean, your best bet would be to go with the yearly option on the Mesh Elite, Trudy, because then you'll get the training sessions with it. How do you keep the trades cash secured when they overlap on Thursday or Friday? Right. So what you're saying is, well, there's two ways you do it. One is if it's trading at like a penny or two, which they usually are, you can close them out if you want to free them up, or if you have the extra buying power, then you just put on the new trades. But that's something we always discuss. A lot of times people will just take off the trades because they made like $120 and they'll just pay the $4 to just end the trade and take it off. So that's one way around it. But we like doing it on Thursdays instead of Fridays. We talked about this because on Thursdays is when the trade comes out. Okay? I'm just learning now so you offer again if I don't do it now. Yeah, I mean, I'm never going to tell someone it will never be available again. But it's working really well right now. I'd say if you're doing anything, start with this because it gives you such a positive experience with it. What's the minimum account necessary if one is not going to own the stock? $5,000, $2,500, Todd? What do you think?
$5,000. You have to, you get the options set up and the approval. Yeah, I mean, you can do it with $5,000. My son does it with $5,000. So yes.
Getting 2% in at bank is, yeah, exactly. Trudy, come on board. We'll take good care of you. Did she sign up yet? Trudy, I'll be on the lookout for you. I like your comments. Come join us. All right. What? Yeah, Myra, you're good to go now. We put that up. Is reference literature provided so one can review in order to understand the principles? Yeah. Todd, we have something we send out, correct?
Yes, sir. We do. We have documentation on everything we do. And we have the training webinar we're going to do as well, and the one trade webinar we did, and we've got enough documentation. And as Adam mentioned earlier, him and I are both extremely accessible. And if you have questions and things come up, you can always email us directly, and most of the time you'll get an answer from both of us because we're both reading and we're both making sure that we take care of it because we understand what you're doing here and what you're trying to do, and our goal is to create and help you realize yours.
And one of the things that's nice is, yeah, Todd and I had to correct that because we were both so eager to answer questions that we both were overlapping. So now we include each other on the answers. So we make sure not to do that. Yeah, Myra, there's a possibility if you take ownership of the stock, you could end up making more than the 300 a week. That's what happened in LNG. That's what happened in SLW. I've tried something like this before, and if I didn't make the trade as soon as it was released, the prices would change due to the volume driven by the group. Does this have the same effect? No, but if you wait an hour, the market could move enough to move it. It's good to try to get in, and then what we do is if you missed it, you ask us the next day, do you still like it, or is it worth it here? So we're not going to trade thinly traded stocks. We're not going to trade. Our goal is not to move the market. That's why we're only letting limited people on. But with the stocks we trade, we avoid that. All right, Bill. All right, Pablo, Myra. So there you go. I'll be working as you do the weekly 30-minute webinar. Will be recorded, and will the trades need to be put on at the time of the webinar? It'll be recorded, and we'll send you an email right after, so you can put on the trades if you want to. So you could get in Friday morning sometimes. You just want to make sure it didn't move too much. Do you provide print or download information, the principles and techniques you have presented to members to review? Yes. Which firms do you recommend? Once you're in, shoot Todd an email and he'll answer that. Okay. Huh. How do you pick the stocks besides high liquid stocks? Do you use MACD, RSI, etc.? The secret to the formula. It's my background as a technical analysis. I use some of my proprietary stuff like the rule of 5. I pay attention to volume and key charting patterns. I'm not using MACD or RSI. If you see in the charts I've done, I actually remove those. The only thing I leave is the MACD histogram, but I do not use those. Can you have a margin account in a Roth IRA? Todd?
No.
No.
No. In IRAs, you cannot have margin because in IRAs, the government is not going to let you borrow money and increase profit because you're not paying taxes on that money. So they're not going to allow you a margin account. But if you're going to do this in a Roth IRA, it works very well. In fact, I've done it in mine and my mother's, and you just have to have enough cash or do the spreads and those type of accounts. But margin accounts are not allowed in any retirement type of account.
All right. For Pablo and Trudy and Myra and 6 other people, I'm going to leave that the Mesh Monthly up for like another couple minutes. I believe in the bigger commitment, so go do that now as I'm leaving it out before that window's gone. Actually, what I need is a way to enter now, but I had huge expenses, so I have to make a couple more. Okay. This is what I think the mother's going to tell you. So isn't it hard to learn, Adam? No. It's not. It's something that once you get it, you'll get it. If you take the time to learn it, you'll be doing it forever. But you just have to commit to learning it. It takes, trying, us walking you through it for a couple weeks, and then you're good to go. Can I start a trading account with 5,000? If yes, which platform? We can introduce you to Ameritrade, Fidelity, Options Monster, whatever you're thinking. Yeah, tomorrow there will be new trades going off. Tomorrow at 11:30, you're gonna get the new trades. Do you ever just buy puts and calls one directional? Yes, that's Phoenix Options. I could send you that website if you want that. I'll send it to you. What is it? I'll send it privately. I'll send it to you. I'll have someone send it to you right now.
Well, Adam's typing that. Just remember, this strategy is strictly about grinding away and increasing your own net worth by making a little bit of money every single week. I mean, again, we're on pace this year for 93%, and think about it. If you start with 15 and you make 90%, you take a little bit off for a little bit of fun. You buy yourself a present because you did so well, and then next year you've got 25 and you do 93% again. And that's what we're looking to do, is looking to grow this as a regular weekly, very low risk, very high reward in the big picture philosophy, and that's really what this is all about. We're not looking for a home run. We're just strictly looking to hit singles every single week, and so far we've done it, and that's what we continue to do.
All right, 4 spots total left that that we're accepting on this call. 4 spots total left. Okay. I'm going to keep answering questions, but for anyone looking to join, we've kind of hit our mark. So we're only going to leave 4 more spots open, and then we will be shutting it down. But we thank everyone who's joining. Do you ever trade ETFs? Or just, no, we do ETFs also. We do ETFs also. Do you just buy? I answered that one. All I see is the Q&A. Yahoo. Is that $349 for 3 months? How about $97 per month? Can you do that? No. What's $349 for 3 months? $349 divided by 3 is 116. I will do this for you, Pablo, and pretty much for anyone who dives on for the monthly because I don't care. If you join and you're not happy with the quarterly, if you join for the quarterly at $349 and you're not happy in the first 30 days, let me know. I'm saying it on the record. This is being recorded, and we'll refund everything but the $97 for that month, which would lower your exposure to exactly what you're asking for. As I said, we work on the relationships. Okay. Sorry. I think we answered all the questions. Anything else? Okay. Still a big crowd. I'll stay on here because now we have 3 of those spots left, and I'll welcome you by name as you join, if you want, or I won't, actually, because that's your privacy. But any other questions as we're waiting for our last 3 members to join? Two. There are 2. S. I won't say a full name. Okay. Okay. Todd, anything else to add, or no? We good?
I think we're good. I just, again, I know a lot of people are concerned about, the overall market and what can happen. And if you watched me on Fox today, I said, surrender Dorothy from The Wizard of Oz. I said, the Fed is still backing the market. But again, the real truth of the matter is this strategy is not necessarily and very rarely affected by market moves, other than the fact that we're going to use, instead of MACD and RSI and stochastics, we use the Adamesh read, and he's unbelievable at picking the level of the stock in the market, and has done so throughout the crash in 2008, was able to pick winning stocks to the long side, and throughout now. And that's what you really have to understand, is that those things don't affect us because we are not playing in that high-risk arena of what everybody is looking at, the news that you hear every day, Netflix, Tesla, that's not our arena. We're not interested in that. We're just interested in taking our little payday and putting the money in our pocket and moving on to the next trade.
Somebody wanted to know if this will be open again at some point. The answer is yes, it will. But the event like this and what we do, it's usually once a month. And I think the way you look at it, the trades are tomorrow, and the goal is, like, if we can't pay for this service, in the first month, then we're not doing a good job, because the goal is that literally it pays for itself. Unlike life insurance, whole life insurance, which pays for itself in the first 7 years and then it's all profitable, this pays for itself in the first month and then it's profit. So, Bruce, I would suggest you make a move. We're still holding out for 2 spots. I'm not getting off the phone. There's a lot of people still on this call. So ask your questions. Whatever's going to put you over the edge. I always hit my number, and that's it. I don't want any more. I'm not greedy, but I like to welcome my people. Trudy, so tempted, Adam. I will be joining probably next time as I learn what it's all about. Looking forward to the relationship. Oh, Trudy's coming now. I know your name. I'm thinking about you. You get that extra attention. Is tomorrow's call a special time? I thought you said, what is that? All right, there's one more. There's one more spot. Is tomorrow's call a special time? I thought you said 11:30. The OMM site says 2. Don't. Does it say 2? Because if it says 2, there's a problem. It's 11:30 every week. Let me look. It's 11:30 Eastern. We're logging in right now just to check that. Wait, where are you seeing that? Richard, where are you seeing that?
The old recorded call.
Oh, I'm sorry. The old. It used to be at 2 o'clock the call. So what you're seeing is the previous calls. You're seeing the time they took place at under the content. Those are the old calls. I told them not to leave them up there because they're meaningless after the week. But I guess that. I mean, yeah. Okay. We're done. We're done. I'll leave one more. I'll have one more. I'm greedy. Only for Trudy. It wasn't Trudy? Trudy, we're staying open for you. We hit a number. We're staying open for you, Trudy. It's at 11:30 Eastern. I was not able to get there in time to hear the webinar. Will this be presented again? In 2019, no, I'm just kidding. George, let me, here. One sec. Okay. Canadian, eh? Paolo. I appreciate that. I just can't do it right now. Sorry. Okay. One sec. Membership content. Yeah, that's what it was. Yeah, so that's the old calls. How come everyone wants to know if I'm going to offer this next month? Well, we hit our number, but I'm staying on the phone. If you guys are on the phone, I'm on the phone. I'm going to have fun. There's still a big crowd. I don't know what you're waiting for us to say, but I enjoy crowds.
Yeah.
I wish this was in person. Now there's more people actually coming on to the call.
Yeah.
The numbers are growing. I don't know what to do. All right, guys. This has been fun. We actually delivered over. I think we answered every single question there was. All right. Yeah. So let me just. This is the one to do. Here, one sec. We went over sending out the message to come. We hit our mark, but whatever. We'll leave it open for a couple minutes now. If you want to sign up, sign up. We welcome you aboard. I really believe in the service. If you can't tell, the only reason I'm this light about it with Todd is because we deliver every week, and we feel good about what we're doing. There will be weeks where you end up owning a stock. There will be a couple losses we take, but we think the performance, we expect it to stay at the level it's been. And again, the goal of $300 a week. We'll do a great job for you. We appreciate the relationship. That's what it's about. Todd, thanks. People are going to be surprised at how much you talk on the calls, considering how quiet it's been. But I appreciate you. Thanks for being here. This is fun, guys. We'll leave it open for a couple more minutes. We'll go to 30 if we need to, because now we let one more in. So we'll leave it open to, we'll leave it open for another like 20 minutes or something. But we welcome you aboard, the new people, and you'll get a welcome email. You'll get some welcome materials. You'll get the invite onto the call. The webinar is 11:30. We'll do a good presentation. If you're brand new and you're intimidated, you go watch the training video. It will show you exactly what to do, and you're in good hands. Let me just make sure I answered